You quote in your book two gentlemen, Jeff Silver and Ben Hunt, who wrote a letter to their investors in the second quarter of 2010. What did that letter say?
Oh, at Iridian. Yeah, they said that the market no longer traded on company fundamentals, that these robots, which hold on to stocks for about 2 seconds, traded on the basis of volume, of momentum, but the machines didn't care about the quality or the earnings of the underlying stock.
Right.
And so stocks had become the equivalent of chips in a casino. And this had, the market had been the greatest capital allocation machinery in the world.
Right.
Allocating capital from investors to promising corporations. And it's been destroyed by these machines because, again, everything is short-term trading. The fundamentals no longer matter. It's a mug's game. If you're reading, Graham and Dodd.
Let me put this to you. I'll say something provocative. If what they said was true, that it all becomes chips in the big game, what does that say about the asset known as the New York Stock Exchange or NASDAQ? Is it an asset anymore, or is it a derivative?
It's a one-armed bandit. It really is. The whole market is a derivative.
Now, you have the SEC and the CFTC, and there's been a whole lot of inaction. Is this because of a turf war or between Mary Shapiro and Gary Gensler? Tell us. You're the DC current guy.
Yeah, it's two things. There is a turf war. It makes no sense first of all, to have two regulatory agencies because, as the flash crash showed, the markets, the commodities markets and the equities markets are now one market because these robots trade at the speed of light across all the markets and have unified them. I think Gary Gensler wants to be the top dog.
Right.
And I think he's more politically adept and a little smarter than Mary Shapiro. And there is sniping between the two agencies. And in fact, it interfered with the investment of the flash crash. They refused to cooperate until the CFTC threatened to go alone and embarrass the SEC.
Explain to us, though, Gary Gensler's at the CFTC. HFT trading that we're speaking about today is relegated, at least in this conversation, to equities. What jurisdiction does the CFTC have over the SEC? They're two separate government entities.
Yeah, but high-frequency trading is across all markets.
Okay.
The computers are trading not only on equities, but they're trading the futures, they're trading the E-mini futures, options, they're trading the exchange-traded funds, which are on the commodities exchange. So now the CFTC has put some rules into effect where they can prevent abuses, like the types of painting the tape. But the high-frequency trading has not been banned from commodities. So
now that's despite there being a section 747 in Frank Dodd. Yeah. How come they can't implement it if the rule was actually there, embodied in the regulation?
Well, they could. They have to write rules, but they can ban specific activities like momentum ignition or spoofing, fooling other machines and fooling humans into thinking there's more activity,
right?
Or naked attempts to manipulate the market. But you know how these regulatory agencies work. It takes months, if not years, to write a regulation.
I want to be conscientious of the time. I have the benefit of having read your book. It seems as if the stock market at large, and I mean trading and investing and everything that it encompasses, has become a bit of a Frankenstein created by the SEC. Is that right or wrong?
It is. It goes back to, I think you could trace it back into the 90s. Arthur Levitt.
Who wrote a book called Take on the Street, mind you, but go ahead.
But he actually has so many exchanges competing for a finite amount of volume that the market has become unstable. It's a Rube Goldberg affair. And I use that term, Rube Goldberg affair, because a former SEC muckety-muck came to me after I wrote the book and said, we all know it's bad. We know that we're going to have more flash crashes.
Right.
We know we're going to have a bigger incident, but we don't know what to do about it.
We know we're going to have a bigger incident.
Yes. Excuse me.
We know that we're going to have a bigger incident than the May 6th flash crash.
Yeah, this could be across multiple markets.
Well, that's endearing.